garsworld.com, the future of trading. This is Stock Vision PowerScan, real-time stock screener, introduction webinar. Disclaimer, none of the information in this presentation should be construed as financial advice, nor are we recommending any specific investment. Any trades demonstrated are examples only and are not investment recommendations for any particular instrument. Candlesticks. A lot of you will already know this stuff. We want to go over it anyways because there is a learning curve and all the graphs we look at use candlesticks. So a candlestick is a great way to view a lot of information about a stock in a small amount of space in a graph. The way it works is each candle represents one time period, i.e. a day, 2 minutes, 15 minutes, etc. The very tip-top point of the candle is its high, the very bottom point of the candle is its low, and the body mass in between is the open and the close for that particular time period. So for this particular candlestick, we can construe that the stock did something like this. And the candlestick is green because the stock gained from its open. Now, technical analysis is one thing. Interpreting recent chart activity to anticipate what other traders will do next. Now, this is very important. Technical analysis grows with time. The more time goes on and the more humanity evolves, the more technical analysis grows and becomes more valuable to your investment decision. So, there are three components to technical analysis: support and resistance, trend, and momentum. Traders and robots use these components to anticipate what other traders will do next. I should note that all of these components are relative to time. So when you're measuring these three components, it's always relative to a time period at which you're measuring them. In fact, everything in the universe is relative to time. So now we're going to go over these three components and give an example of each. So support and resistance is a price that a stock tends to not go above or below as it is going up or down over a period of time. Let's go ahead and use an example of AMR. This is the 1-year chart of AMR. Each candlestick you see on the graph represents 1 day. And the first thing that jumps out at me is during this time period, the stock has an obvious support level. As you can see, the stock never goes below this support level during this year. And furthermore, it also has a pretty good solid resistance level up here. So essentially, other traders will use these lines as guidelines to what they're going to do next. And at this point in time, AMR is just a little bit above its support level. So essentially, it might have a chance of bouncing off this support level during the next month or so. We'll see if that becomes true. Okay, trend. Trend is the general direction of a stock over a period of time. Let's look at our example of C. This is Citigroup Inc. The thing about trend, like everything else in the universe, is it's relative to time. So let's say we were to measure the trend for this entire year. Once again, this is a 1-year graph. Each candlestick equals 1 day. What we want to do is measure the trend for this whole time period. So it would be slightly upward like that, right? Now let's do this. What if we were to break this trend line up? Say we were to measure the trend for the first 9 months. What would it look like? It would look like that. It'd be more upward. However, if we were to take the trend for the last 3 months, then it's downward like that. So always make sure you're aware of the time period that you're measuring your trend lines, because it can change. If you're measuring your trend for today, a stock might be trending up today. But if you were to look at the stock's trend over the last year, the stock might be trending down in the last year. So look at it from every angle you possibly can. Momentum. Momentum is trend or direction accompanied by volume. Let's look at our example of Moby. Now, first thing we want to focus on is momentum is one of my favorites. I was a football player, so I'll be the first to tell you that momentum is the most important of the three. And what I want to show you is there's a very high volume on Moby. and it's accompanied by large trends. So that would be considered momentum, positive momentum in the positive direction. And there's a reason why everything happens, right? So I want to know, why did this happen? Why did Moby have this reaction and momentum like this? So I did my research. On Wednesday, March 23rd, 2011 at 7:30 a.m., Sky Moby Limited today announced that the company has entered into an advertising contract with Sohu, one of the leading Chinese online destinations. So essentially this news comes out, this positive news, the stock reacts to it, it goes up, and then the stock goes up another 7.5% from that point for the rest of the day. Now the reason why the stock continued going up for hours and hours after the news is because, for one reason, a lot of people don't find out about the news until later. So people find out about this news 2 hours later and they buy, and the stock just continues ramping up for the entire day. The stock ended up about 12% by the end of the day. So this would be considered a winning trade setup. My question is, how do we find this winning trade setup? Are you going to sit there and look through every stock? Are you going to watch CNN? Well, you can knock yourself out, but I know what I'm going to do. I am going to use Stock Vision PowerScan, real-time stock screener, which has revolutionary filters that will detect sudden momentum spikes, price spikes, or virtually any trade setup you are looking for in real time. So if you wanted to find a stock that's trending like C, you can write a filter for it. If you want to find a stock with support and resistance levels like AMR, you can write a filter for it. And then of course, if you wanted to find a stock with momentum that may have been released with some news like Moby, then you can write a filter for it. So that brings us to PowerScan filters, how they work. Basically, you start with a master list of 1,800 stocks. The reason it's 1,800 stocks is because we take out any stocks that trade less than 200,000 shares per day and stocks that trade less than $1 per share. These stocks will go through a filter. Okay? The filter consists of formulas. It'll spit out your list of only the stocks that fit the formulas in that filter in real time. So your filter will update every 5 to 10 seconds with new stocks that fit the components of it. And that is why it is a must-have for all U.S. traders. It's the only way to find stocks that have just released some wild financial report or some intraday news that's affecting it and can ramp up intraday. So the formula measures for the filter are support, resistance, trend, and momentum, or any combination of these. So now you see where I was going with all that stuff. You basically take the technical analysis terms and you turn them into filters that will find stocks that you think you know the direction, you think you can pinpoint the direction, trend, momentum, support, resistance levels, and you can use that as a guideline as to what you think the stock is going to do next, as well as other traders. So that concludes part 1 of the introduction webinar. Go ahead and pull up part 2, where we're going to open up PowerScan and introduce the software and show you some of what it can do.